Welcome to the Remarkable Retail Podcast, Season 9, Episode 8. I'm Michael LeBlanc.
And I'm Steve Dennis.
Our special guest on this episode, the first of 3 episodes recorded in the Bamboozer pop-up studio at the inaugural Shoptalk Fall in Chicago, is Zia Daniell Widger, Chief Content Officer, eMarketer. Steve, when I was listening to Zia, I feel like we're having a conversation with dozens and dozens of really smart people and tuned-in analysts all in one interview.
Well, yeah, I mean, she has at her disposal from her crack research team just all sorts of great insight. And because she's been at this for some time, she's got great perspective and is able to just boil it down, I think. So there's lots of great takeaways. Also, which we talk about a little bit, but fun fact, Zia was part of the inaugural Shoptalk team.
All right.
Back, whatever that was, 8-9 years ago. I guess she's been an eMarketer for a little bit now, but kind of bringing these 2 content worlds together with Zia.
So I was reading a good friend of yours, good friend of the pod, Seth Godin, has just launched a new book on strategy. Should it be on people's must-read, must-get list for the holidays? Have you had a chance to look through it?
I have. I saw an early version of it, and it's really interesting. It's very good, as people are familiar with Seth, they will know one of the things he's so talented at is being able to boil down fairly complex ideas to both easy to digest and remember kind of ideas. So some folks may know he had a book 5-6 years ago, I guess at this point, called This is Marketing. And by the way, you need to say, this is marketing. I was told so this is strategy. But yeah, it's great. And there's also, I guess we could put a link in the show notes to this. There's also a Harvard Business Review article on strategic myopia that if you want to just get more like a 6-minute bite at the apple rather than the whole thing, or just want to kind of wet your whistle for the book. But debuted at number 1 in a bunch of categories, and it's well worth the read. Congratulations
to Seth. Fantastic news. Now, before we get to an interview with Zia, let's dive into this week's most important retail news, brought to you by Scale, the world's fastest-growing enterprise commerce platform. Learn more about their solutions at scale.com. That's SCAYLE.com. All right, we're in it. Here comes Q4. Brace, brace, brace. What are the vibes? I mean, I see it going in 2 directions at the same time. What's your I got a lot going on. What's your sense of what we're heading into?
Well, one of the things I heard this past week, and this is very U.S. specific because of the upcoming election, is that the vibes are wait and see, that consumers are becoming, and I guess businesses as well, are kind of tapping the brakes a little bit because of the uncertainty in the election and, of course, uncertainty more broadly in the world with the Middle East and Ukraine, et cetera. But and a lot of this is anecdotal. I mean, we did, I don't think we really delved into this, but we did see September sales for retail, both from the U.S. Census Bureau and from the NRF, and sales were pretty tepid overall. But some of this is just also anecdotal in terms of some things that have been said on earnings calls and what some analysts are hearing. So maybe calm before the storm of the holiday. But the other thing which people are starting to talk about, some from government data, some from many of the big banks reported earnings past week or 2. And it's a little bit of a mixed picture, but some banks are increasing their reserves because of rising consumer debt levels. But I think it's a bit of a wild card, as I think we touched on last week, in terms of what the results of the election will mean. I think we're going to have a fair amount of chaos for a bit, hopefully only a bit, regardless. But then, we're going to be, hopefully we move past that fairly quickly, and then we're going to be into the heart of the holiday. And one thing I was just going to say about that before we move on is I think everybody, and maybe we say this every year, it looks to be a highly promotionally intense season. A couple pieces of data that support that. First, Target announced not across the board price reductions, but pretty large scale price reductions on about 2,000 items to try to be sharper on their everyday pricing. And this is a very specific thing, but Walmart announced an inflation-free Thanksgiving dinner promotion, which includes 29 items and 8 servings for just $7 per person. So want to save a little money with your loved ones coming up in a few weeks here in the States? You might want to get yourself to Walmart.
Fantastic. Let's go to the, from Walmart, let's go to the luxury side of the equation. Lots of turmoil, and we've got a recent decision by Justice to talk about and some results coming out.
Yeah, well, we've touched on this with the news about Neiman Marcus and Saks across the last few months, LVMH's disappointing earnings a couple weeks back, I guess, at this point. The My Teresa acquisition of YNAP, et cetera. But we did get a bunch more news this week, and it still largely points to a picture of luxury kind of hitting a wall. The one big exception is Hermes, which has continued to really put up strong numbers despite really what just about everybody else is experiencing. They had their sales up 11% for the quarter. Now, I'm actually working on a piece that's going to come out in Forbes that talks about how average unit retail price increases are responsible for quite a lot of the sales increases with luxury players, because Hermes did report that their prices were up 9%. So not a lot of growth from new stores, more transactions, et cetera. But anyway, when you look at the rest of the industry, Kering, which is the big competitor to LVMH in terms of the European conglomerate, so that's brands like Gucci, Saint Laurent, Balenciaga, a bunch of others, their sales were down 15%. Zegna, the men's brand, down 7%. Now, as we talked about a bunch of times this season, China is definitely a big contributor to this, because the Chinese market, which is where, of course, a lot of luxury players really have been focusing on their growth for, 10 or 15 years now, that's just a mess. But North America and Western Europe and Middle East and a lot of these other markets are pretty stagnant or down. So it's not all a China problem, though China is clearly the big drag.
One thing no one really talks about is all that Russian money that used to go into some pretty high-end brands is missing as well. We kind of skip over that. Now we're into, whatever year of the Russian invasion of Ukraine, but there was a lot of volume bought by those higher end folks in Russia that I don't know, maybe they're getting it through a secondary market, but maybe they're not.
Right. Yeah. No, it's been historically a pretty big contributor. And, even with China, you've got the sluggish sales, or more than sluggish, really pretty disastrous sales in China, but you also have less Chinese tourists traveling as well. So it's kind of a double whammy. So some of the weakness in North America and Europe, it would be a result of fewer Chinese tourists as well.
I saw some stats for the city of Vancouver anyway that said they were up. Chinese tourists travel was up 38% year over year, but still down 65% pre-COVID. So they're coming back a little bit, Chinese tourists, but not in any way, shape, or form the way they did pre-COVID.
Yeah, absolutely. So, I've seen similar stats for some of the gateway cities in the States as well. The other big piece of news, and we'll see what happens here, but as we've talked about, it looked like the $8.5 billion merger between Tapestry and Capri Holdings. So Tapestry, just for people who aren't familiar, their two big brands are Coach and Kate Spade, also Stuart Weitzman. Capri is Michael Kors, Gianni Versace, and Jimmy Choo. The merger was blocked by a judge this past week. And I don't know enough about this, nor have I seen enough commentary to say what are the odds that it's really dead. But certainly this was a bit of a surprise, given some of the signals we had seen. And it sent, I think it was Capri's
the stock off a cliff. It sent them off a cliff.
Just dropped like crazy. So we'll see how that sorts out, but more to come there, presumably some appeals or whatever, but it doesn't look like if it's going to happen, it's going to happen smoothly at all. And then I guess there's this other question, the other deal that's hanging out there is Neiman Marcus and Saks merger. And that also looked, based upon some initial responses from the FTC, like it was going to move forward. So I don't know. I mean, I think there's lots of different arguments about the anti-competitiveness of both of these deals. And so that's perhaps a topic for another day to really get into that. But I have to think that at least makes you things that make you go, in terms of that deal as well.
I had a conversation with Joe Jackman. Joe Jackman does amazing work in retail. And one of my questions for him was something I think about a lot. Can brands ever come back? Like they've been beaten into submission. Can you ever bring them back? And now we're starting to get a bit of a case study with that with Bed Bath & Beyond. So can they relaunch their physical retail presence? They seem to be a lot of activity. What do you make of it?
Well, I would say just quickly in terms of the general question, I think there's not a lot of history, good history in terms of brands really coming back from the brink of death. I mean, perhaps Abercrombie and Fitch is the best example because they were certainly in a lot of trouble. We got some news from their former CEO getting arrested as well, although he's been gone for quite a while. And it's not really new news, but it's really a terrible story. So, there are...
Nygaard. We have our own here, Nygaard, right?
Yeah.
Nygaard business suffered the same problem. So, anyway,
there are a few examples, but not a lot. Bed Bath & Beyond, just to remind people, once the biggest category killer in home-related goods, they got themselves into a lot of trouble starting a couple of years ago. COVID was not their friend. They made a bunch of stupid strategic decisions. So anyway, they filed for bankruptcy. They closed all their stores. They got acquired by Overstock.com, and subsequently Overstock rebranded as Beyond. So there's now kind of an Overstock business and a Bed Bath & Beyond online-owned business. Just for quick context, then we'll get into the more specifics of the story. Beyond's not exactly been lighting it up since this deal. They just announced a 20% workforce reduction after another weak quarter. I believe their sales were down something like 17%. Margins very poor, and their stock is down about 76% since the beginning of the year. So quite a weak business. The merger does not seem to have helped them much at all. But nevertheless, they persist because they announced two partnerships the past, 10 days at this point. The first is with the Container Store, which has been having a lot of its own problems. They made a $40 million investment in the Container Store, which is actually about what their total market value is. So that's pretty sizable relative to the balance sheet of Container Store. And they're going to be launching, Beyond are going to be launching an assortment of co-branded, so Container Store, Bed Bath & Beyond, co-branded kitchen, bath, and bedroom products. So, we don't really know how vast that is, exactly how it will be worked into the Container Store's assortment. But it is a way to get what is a very well-known brand in the U.S. for sure.
Beyond Containers. There you go. There's some brand.
Beyond Containers, yes.
So, as you would like to say, worth every penny you just paid for it.
Yes. So, interesting. And a Container Store certainly needs something to help them get back on a growth path. So, and they need to shore up their balance sheet. So it seems quite favorable from the Container Store point of view. Whether the market will be very responsive to it, I guess we will start to understand that better next year. The other deal is with Kirkland. Now, for people that may know the Kirkland brand, the massive Kirkland brand at Costco, totally different company. Kirkland is I think it's about a 325 store home goods chain in the United States. Their business has actually been struggling a little bit. And to that end, beyond throwing a lot of money around, they are going to be providing Kirkland $17 million in financing. But the really big news is that Kirkland is going to open and run what they're calling 5 neighborhood Bed Bath & Beyond stores. So this is actually Bed Bath & Beyond, not just some products going into Container Store, but actual Bed Bath & Beyond store. The stores are meant to be about 15,000 square feet. So that's considerably smaller than the old Bed Bath & Beyond stores. And, they're calling them neighborhood, I think, is to really leverage the convenience, make them less destination kinds of stores. So that will, those will roll out next year. I don't think they provided the timing of the markets yet. So we'll see more about that. I guess it's interesting. I certainly think Bed Bath & Beyond has enough equity and brand recognition and conceivably some unique products that could make this work, but it's not as if there isn't a ton of competition. And Kirkland's generally weak business and weakish balance sheet, I'm not sure they're the folks that can take this to the next level if the test proves successful. But anyway, it's interesting move, a lot going on there. And I think we'll have a better idea what this looks like in, probably 6 months' time.
I also think it's a challenging category. I'll give you a bit of Canadian context. A guy named Doug Putman, entrepreneur, he bought Toys R Us actually in Canada, so you would know him. from that perspective. He bought 24 Bed Bath & Beyond stores, rebranded them Rooms and Spaces. That didn't last 6 months. He closed them all down, and then actually he's got, if you go to a Toys R Us in Canada, you find a bunch of kitchen stuff in the back. Like, it's just a category challenge. And he's a pretty good entrepreneur, but it just did not work. So I wonder if there's just, challenge of the category and the approach.
Yeah.
The time has passed for that kind of approach. I don't know.
Yeah, I mean, when you think about all the home-related stuff you can get at department stores, at Kohl's, at Target, at Home Goods, I mean, there's just, and obviously from various online players, Walmart has expanded its offerings. So yeah, it's just a really, really
tough
challenging category. Yeah. So good luck.
Speaking of challenging categories, I was looking at the price of coffee. It just keeps continuing to climb, and it made me think of Starbucks. So we had some news with the new CEO, Brian Niccol, talking about how much work there is to be done. I guess he's starting to dig in. And some of these things we've talked about, the irony of going to a beautiful Starbucks store and having a great experience and having it take 20 minutes to get a cup of coffee, or you get some TikToker in front of you ordering this very complex coffee and you just want to go. So lots going on with the Starbucks business. I think it's one to watch for the next 12, 14, 24 months. Yeah. Yeah,
I'm sure we will be coming back on this story. I think there's a few brands like Starbucks, Nike, and others that I'm sure we'll be touching on next year. So Brian Niccol just getting started. We have mentioned this a couple of times. Just a few things I mentioned really quickly is we're starting to get a little bit of insight into elements of the new strategy because he made comments on their investor call around some of the elements that he's looking at. One is simplifying the menu considerably, simplifying some of the operational issues. We talked about, I think, a few weeks ago about just the mix of all the digital orders with people that are trying to stay in the store and size and layout and all that kind of stuff. So I think we'll see some operating changes be at least tested fairly soon. A lot of concerns around the value, everything, inflation, which we've talked about, obviously, with lots and lots of retailers. But I think particularly because of some of the menu complications and the price of coffee, prices really gotten sky high in particular there. The other thing he talked about, which Starbucks has kind of gone back and forth on, is getting back to being more of this third place, creating this community vibe. My sense, and I think I mentioned this on the podcast at one point, that some of the Starbucks near me, they've basically taken out any kind of comfortable seating because they don't want you to stay. And I think some of that is to create more space for the digital orders. So I don't think this is an easily solved issue, probably quite expensive to really do this in a significant way, given what they've done. But anyway, we'll see what happens there. And then the other thing, which I think absolutely is going to happen, is they've got to rationalize their China footprint. They, like we were talking about, the luxury players really went kind of everybody out for a pass over the last decade to secure big footprint in China. And I think in some cases they've got a lot of competition from Chinese companies, but also they clearly overshot the runway relative to at least the near term potential in China. But the other thing, as I mentioned, this was part of the investor call. He's really starting in a pretty big hole. They reported that their comp store sales fell 7% for the quarter. I think it's the third straight quarter that they've had negative comps. That was a 6% decline in North America. Again, worse in China, 14% in China. But really the weakness is pretty much across the board. And they suspended their earnings guidance. Now, there's two ways of looking at this. Some of our folks that follow the stock market more, sometimes with a new CEO, you suspend earnings guidance because you just want to say, okay, new sheriff in town, who knows what's going to happen? I'm not going to promise that we're going to be lighting things up in a couple quarters. Sure. Other times it's like, man, I don't know. We have no idea. We have no visibility to this thing. And we just want to get ourselves some breathing room. So anyway, they did suspend their earning guidance. So I think we're going to be well into next year before we kind of get into a little bit more of a normal cadence with one of the big publicly traded companies. That's a wrap on the news. Thanks again to our friends at Scale, the world's fastest growing enterprise commerce platform. Let's get to our great interview with Zia from eMarketer. Well, Zia, welcome to the Remarkable Retail Podcast here at Shoptalk Fall. You're our first interview, and it's lovely to see you on this beautiful morning.
Yeah, I am very excited to be here and happy that it has finally hit 40 degrees here in Chicago.
No kidding.
Yes,
right?
and for our international listeners, that is Fahrenheit, not Celsius.
Yes.
So
That's Vegas.
Yes.
Yeah,
Yes,
that's
exactly.
That's what it's
But
like
no, it's so great. We've known each other for quite a while, and we've finally getting you on the mic, and excited to talk about a number of things, actually. I think we're going to cover quite a wide range of interesting findings. But before we dive into that, maybe just tell us a little bit about who you are and what you do and the company you work for.
So thank you, Steve, for hosting me, and thank you, Michael. And I am absolutely thrilled to be here. So a little bit on me. I am the Chief Content Officer at eMarketer, which is a data and insights provider based in New York City. Many folks may be familiar with us through our red and black charts that make the rounds in presentations and on LinkedIn.
I may or may not have included some of your data over the years in some of my writing and keynotes. And,
Excellent. That's what we like to
exceptionally
hear.
valuable. Paul in Canada is a great contributor.
Yeah, Paul Briggs is fantastic.
Briggs,
yep, exactly. So we are known for our forecasts and looking at how digital markets are transforming with a particular focus on retail, e-commerce, and advertising.
Excellent. And how did you? I'm just kind of curious how did you find yourself in that line of work? Was that your dream as a wee child to be doing that kind of work?
Yeah, I love research because it is such a combination of kind of the business world and quasi-academia. You get to sit and think big thoughts about how markets are shifting. And I've been in kind of the global content world for a long time at this point. So is it Jupiter back in the day? And then we turned into Forrester Research when they acquired us. So I was there for about 7 years, ultimately sort of overseeing their omni-channel team. Then came over to Shoptalk in 2015, which was very exciting to run the content team there. We spun out Grocery Shop and was there until a few months after the pandemic began, after we sold the company to Hive. And jumped over to eMarketer kind of mid-2020 and have been there ever since.
Excellent.
Well, it's such a great opportunity to have you on the mic because you've been, on, so to speak, on both sides of the table, right?
Yep.
Particularly at an event like Shoptalk. So let's start there. You've been on the content side. You're now, what are you doing here? Why do you come see some friends from Shoptalk? Well, what is it that draws you here? You're about to take the stage, so you're obviously doing some interviews, and that's tremendous value in and of itself. But what else do you come here for? What do you get out of this? Is it context for the numbers that you do? What is it?
It's a few different things. So certainly to learn. So that context piece that you mentioned, I love going to the sessions. They always do an amazing job with the content at these events. And also to hopefully enlighten, having 3 interviews coming up over the next couple days. We're hoping that we will get some great insights from our speakers that we can share with the audience. But then on top of that, having a chance to meet with clients as well is always valuable and just overall raise the profile of eMarketer in this broader space.
One of the things we wanted to talk to you about is really get into some of the work that eMarketer does. And fairly recently you released your quarterly, I'm going to make sure I get the name right, Retail and E-commerce Benchmarks Report, I think is the name. Can you tell us just a little bit about what it's about? And then we'd love to get into some of the findings there.
Yeah, absolutely. So we are quite well known for our forecasts at eMarketer, probably better than almost any other data product that we offer. And we've always had a litany of forecasts that cover multiple angles of retail, whether it's marketplaces or direct-to-consumer sales or e-commerce penetration of retail around the globe. But one of the things that we realized was that in spite of having all of these forecasts, we didn't have one place where we sort of brought them all together to enable our clients to benchmark their growth, their spending, whatever it might be. So this collection that you're referring to is the first time that we've done this and pulled all of our forecasts together to try to create kind of this benchmarking deck that brands, retailers, tech companies can use to understand how they compare to the market.
Well, so much great data in there. Yeah. Some things that I've been familiar with, and I know you've been tracking for a long time, other things I hadn't really seen before. Yep. One thing maybe you could give some color commentary around, and it's something we've talked about on the podcast. It's really just kind of understanding what's going on with sales through physical stores versus sales through e-commerce. Now, what I've been saying for a while, and probably using mostly your data, is e-commerce was growing, I would say generally in kind of like the 13, 14% rate.
Upwards of 10%.
For many years. Physical, I think, was more kind of in the 3%-ish range.
Low single digits.
So obviously, e-commerce growing much faster than physical stores, but physical stores still growing, which oftentimes people forget, I think. And so obviously, over time, that explains the growing penetration of e-commerce. Then we had COVID, and we saw this incredible acceleration. Not really to the 10 years that people said, but anyway, that's something we've talked about enough probably at this point. But then, it's kind of come down. But what it looks like, if I understand your forecast, is e-commerce is now growing still quite a bit faster than physical stores, but at a considerably lower rate. And I'm wondering if that's just, sort of the law of big numbers and the way averages tend to work, or there's something else going on there. So sorry, that was a huge wind-up.
No, that was perfect.
But now, riff.
Absolutely, and I could talk about this for hours. So you are
17-part series.
So you hit the nail on the head in terms of kind of what that growth has looked like. We had the huge surge upward in e-commerce growth rates during the pandemic, followed by a decrease in growth rates. We used to jokingly refer to that as the shark fin-like growth.
Right.
And you are correct in that we've now seen lower growth rates in e-commerce than we have for the past decade or so, while physical retail continues to push forward. So those growth rates are much closer than what we've seen in the past. And I think that has different implications. And one you mentioned is the stores remain incredibly important. And if you look at where Gen Z is getting inspiration for their purchases, stores are still number one on that list. So it's not as if the new generations are going to be entirely digital. They still play an incredibly important role. And to some degree, some digital teams that were able to make arguments for investment in their areas based on that massive growth that outpaced, the physical stores, they're not going to have that same argument, or at least not to the same degree that they had in the past.
Yeah, that to me, that's the kind of so what of what I think we were understanding, the kind of retail apocalypse narrative, which encouraged many people to not open stores or not invest in stores. Caused many people to get behind. And then there was this, oh my God, we've got this 10 years of acceleration, so then sort of all things digital. And now we're kind of settling into this. Well, still, obviously, digital is incredibly important. E-commerce is incredibly important. There's been a lot of incremental growth on an absolute basis, but it's not like the sense that there was going to be this massive shift to digital. Is that fair
I think that's right. And I know we're going to talk about the global piece in a minute, but places like the UK actually saw a decrease in the e-commerce penetration of retail as you saw the swing back of stores in that market after the pandemic bump up for digital.
Was there any surprise? Like, if we go one level down, were there any surprises for you in this movement? For example, I often think of grocery. Remember grocery? Of course, during the pandemic, there is a real reason to shop online for grocery, and then it went from, I don't know, pick a number, 1% to 4% or 5%, still small. And is really kind of ebbed off. And people, it seems to be the perfect category where people kind of say, I just have a task to get done and tick a box. But it really hasn't worked out that way. Is that anything surprise you about grocery as just a category from a digital perspective?
So I'm still pretty bullish on digital grocery overall. I still think it's very supply side driven. And if you have great options that are relatively cheap, a lot of people will forgo that in-person experience of, picking out their own avocados or melons for the convenience of getting it delivered. That being said, it is still not economically viable for most providers. For the consumer as compared to shopping in store, it's still expensive to have that done. And of course, the margins in grocery are so thin that it's very difficult for the grocery retailers to do it profitably. So we've still got a lot of things in the way there, but I think longer term, there are huge opportunities. And if you look at markets like the UK and China that have that incredibly high digital penetration, a lot of that is driven by the fact that they have very large digital grocery markets.
And density, right? And I was talking to somebody about South Korea, of all places. I think it was the world leader. And they've just got, what do they call it? Trip density, the supply chain people would call it, right? So it helps your efficiency. And I guess all things get better. Let's look at a different thing where we talk about concentration. I mean, I've seen some big numbers where some big players are just amassing huge percentage gains in digital. Is that what your data shows as well?
So we do see Amazon's share of digital increasing over time, but that can sometimes mask an opportunity for the rest of the players in the market, which is that, as we talked about, the market does continue to increase by double-digit percentages. So it's not as if there's not a whole lot to go around for the rest of the players in the market. That being said, you shouldn't be misled into thinking that Amazon is going to decline as a force in e-commerce.
Right, right. Let's talk about holiday a little bit. We're not really interested in the kind of numbers and forecasts, but we were talking about, actually off mic, we were talking about Black Friday, the Cyber 5, Cyber Monday, and its relative importance in the scheme of things of making a good holiday for retailers. Where do you guys sit on that? Is it just moving the numbers from month to month, or is there a genuine strategy and purpose there?
Yeah. So we still see the shift to digital happening during the holiday season, and we see the percentage of digital sales increasing by a greater percentage than we did last year. So it is continuing to play a big role there, even more so than it does throughout the rest of the year. That being said, as we were chatting about before, kind of those Cyber 5, those days throughout the holidays aren't necessarily as powerful as they were in the past. We used to see them representing about 20% of all digital holiday sales, and now it's about 15% or so.
Interesting.
And do you think that's largely because of holidays starting earlier, or also maybe in some cases starting later in some respects because you can get there's so much same day, next day, 2-day kind of delivery?
I think that's part of it, and also just the fact that all of these sales are spread out now. It's not necessarily that they're all concentrated on those days. So if you want to get a bargain, there are multiple opportunities to do that.
Interesting. I thought it might go differently. If you look over at China, what do they call it? The festivalization of retail, right?
Yep.
They've got an event, 7 or 8 different events that really are these big milestone events, but it doesn't really seem to be kind of working that way in North America and Europe.
Yeah, I mean, we obviously have had the Prime Days, which have rallied folks, and other retailers have done their own versions of that. But no, we have nothing like an 11/11 here.
Yeah.
Just hasn't happened to that same degree.
Interesting.
Maybe talk a little bit more about Amazon. I guess it's hard to talk about what's going on in retail without talking about Amazon. As you mentioned, they seem to be growing share, but also, I think the growth we see with Walmart, I mean, this is a little bit to the concentration thing, is that because I forget, I don't know if it was your data, some others that were talking about how something like 50% of all retail growth, not just online, is basically Amazon, Walmart, Costco, and Target, or something like that. Like, this is incredible concentration. But obviously, the Amazon model works differently. Do you take a look at what are some of the drivers of Amazon's performance in particular, or is it just kind of things we all expect? Amazing assortment, great prices, fast delivery.
Yeah, it's kind of funny. 20, 25 years in, we're still talking about that trio of price, selection, and convenience, and they do okay on the first one and exceptionally well on the latter two, on the selection and convenience piece, and that certainly has continued to propel them forward. They're now taking, it's going to be close to 90% of the market in things like, books and music. And so in those categories that they already dominated, they're becoming even stronger.
Yeah.
But they certainly have their work cut out getting a big piece of things like grocery. We've seen their various initiatives over the past few years trying to get a piece of that, and clearly it's still in the works.
And would you say, I mean, grocery and apparel, particularly the fashion side of apparel, is another category that I don't think Amazon's particularly well penetrated.
Luxury always
mentioned
as their Achilles heel.
Right. And I think in the case of luxury, there's an issue of channel management, right? A lot of those brands don't want to sell to Amazon. But then I think with apparel and grocery, it's probably more, or other kinds of apparel, maybe more moderate kind of fashion apparel. It might be that the store piece of it is so important, right? And without a physical presence, can they really penetrate those segments? Is that your view?
That is one view, but they've also seen the arrival of the Sheins and Temus of the world that compete on the lower end of fashion, and their power should not be underestimated. They've certainly taken a chunk of the market as well. So, to your point, there are multiple reasons why they're perhaps, I won't say struggling, because they're certainly not struggling in the apparel space, but haven't been able to do as well, particularly with that high end.
Yeah, I think, one of the things that'll be interesting with Amazon is just to see, it's just when you get to be so big, right? It's so, I remember years ago hearing somebody speak about or make a prediction that Amazon was going to get into healthcare and the automotive business. And the primary reason was if you need to sustain these growth rates off of a huge base, you got to add, $30 billion in sales or something every year to continue what investors want. That it's just hard to imagine how much further you can go. Now they've done okay without getting into the auto business, and I guess healthcare is pretty small for them. But you just realize that the the open space, so to speak, or the blue ocean strategy kind of thing is you've got to figure out ways to get into those areas, or you cannot sustain the same level of growth. One other question that's kind of related is, and I can't remember if this was specifically in your report, but just the growth of marketplaces in general. And I think a lot of times that's really hard for smaller retailers or more specialized retailers to really even play in that game. Any comments about where you see marketplaces going?
Yeah, so they certainly have become an increasing force in the market here, although interestingly, probably not to the same degree that you've seen internationally, particularly in spaces like apparel, where in Europe, for example, marketplaces are a very big force when it comes to purchasing apparel, with companies like Zalando having made a mark early on, some of the luxury marketplaces there as well. Here in the U.S., we've had such a strong direct-to-consumer offering presence across the market, with most major apparel brands selling direct, that's actually been one counter to the marketplaces also gaining momentum.
Sure.
But, I think to your question, it will be a challenge for some of these smaller players to really succeed with marketplaces. I think it's been smart that all of the larger multi-brand retailers have taken this leap, and it's also now very much tied into their retail media offerings as well. That's helped propel that area forward.
Yeah, and could we sort of touched on some international. We do have a good chunk of our audience outside of the U.S., and I'm wondering if you could just, obviously there are a lot of countries, and I know you track, so not necessarily trying to go through
starting
every
with
country.
the A's.
Right.
Yeah, that's right. Yes.
Albania.
Start with Albania.
Yeah, huge audience in Albania. That's I'm sort of at the edge of their seats to hear it.
We do have a big audience in Belarus, though.
We do. There's Sri Lanka is big. I don't know. Who knows why?
Okay.
We're number one in some of these countries, which
That's
is
fantastic.
Which may be two people, but anyway, I don't know. But yeah, could you just kind of characterize, at least for some of the major markets, which ones are growing maybe faster, and why, and where are there opportunities or struggles for some of the major countries? Yep,
absolutely. So I'm actually going to start with which ones are already incredibly advanced. So most people know about China, right?
Sure.
China has 50% digital penetration of retail. They also constitute about 50% of all e-commerce revenues globally. So they're just a completely different beast than anyone else. So I'm not going to talk about them too much. The others in the 20+% penetration range are South Korea, the UK, and Indonesia, which is a relatively small market, but very digitally penetrated. In terms of growth rates, the fastest growing markets are those of South and Southeast Asia, as well as Latin America. The top of the list this year was the Philippines. I don't know if you have an audience in the Philippines, but kind of exciting to see.
This will maybe propel us forward.
Yeah,
exactly.
But you're seeing markets like Mexico, for example, that are actually pretty digitally advanced already. Their penetration is not that far below what you're seeing in the U.S., for example, and they continue to grow quickly. Other markets like Brazil and Latin America continue to charge forward at pretty strong rates.
Good marketplace, Mercado Libre, right?
Absolutely,
which is very powerful in those parts of the world.
Yes, absolutely. They have a very strong market share, not just in Brazil, but across all of Latin America. And we have those in our forecast, so we look at those numbers quite a lot to see how they're doing compared to everyone else in the region.
And are there? What's your take? I don't know if there's any one or two things, but I guess originally I sort of thought, well, it seemed like there was a correlation with the degree of smartphone penetration was one of the big factors. But then obviously it's also, or it seems like it's certain companies for whatever reason, Alibaba's and Mercado Libres and others that get traction, Flipkart, et cetera. What explains, I guess, and obviously economic development, whether there's money to spend as a thing. Any distinguishing factors that really help explain the faster growing markets?
Yeah, I think it is a few different things. So to your point, you need to have a certain level of digital penetration. You need to have smartphone penetration, but that's going to be true in most markets at this point. Yeah. So the arrival of big, aggressive, and innovative players certainly has a huge impact on the market. So we saw that in China, as you mentioned, with like an Alibaba and a JD pushing that market forward, Mercado Libre being an early player in Latin America and still having that dominant role there. But if you look at a market like Europe, there is no one player that kind of propelled them forward. Certainly Amazon has a stronghold there. I mentioned Zalando in the apparel space. You've got the big grocery retailers in the UK that were very aggressive with digital early on.
Right. Yeah.
But, sometimes, and we talked about this, sort of the geographic concentration of the population can help a lot as well. Europe is more densely populated than the US. In a market like the UK, that's helped them on the fulfillment side. So they've been able to roll out these offerings across the country quite quickly in a way that we aren't able to do in the US.
I often think about payments as kind of the key driver, right? The way that it's integrated. I read this fascinating statistic about how much money a Shopify makes just on processing payments. Like their partnership, I think, is with Stripe. Like it's really incredible. And I feel like that's a big enabler. The super apps, right, where payment is integrated in such a unique way that it's. I don't know if the big payment processes here are a drag on that performance, or it's just a different way to go about things.
Yeah, and if you look at the big international marketplaces, they tend to have a strong focus on payments. And Alibaba or Mercado Libre obviously made steps there early on, and fintech continues to be an area that Mercado Libre is investing in quite heavily. So.
A couple of last questions. If you and I and Steve were sitting here 10 years ago, we would have been saying, who's the next Amazon? Maybe that was Alibaba. Some would say it was Walmart. Now some people, it's Shein. Now we have this TikTok marketplace, which is posting some pretty incredible numbers. I'm not sure what's going to happen when they get shut down or what. But do you have any comments on the kind of the, I don't know if there's a next Amazon, but certainly I'm intrigued by the numbers that I'm hearing about TikTok Marketplace.
Sure.
And is this a fabrication of just another marketplace, or what is that?
Yeah. So the whole creator economy is set to boom. And I've always thought that social commerce was going to become a major force in retail more broadly. I think we're still working out exactly what that looks like. But the naysayers who are insistent on claiming the U.S. is not China, and of course we're not. It's not going to look exactly like that. But the idea that inspiration and transaction are going to live as separately as they are at the moment, I think is misguided. So I think that you're going to start seeing creators playing a much bigger role. In fact, yesterday at an event I was at in New York with John Furner from Walmart he was talking about the impact that creators had in driving product discovery was one of the biggest kind of digital trends that they've seen over the past few years. And I think we're just at the very beginning of that.
Interesting.
But I had a conversation yesterday with somebody in the kind of shoppable video content commerce space. And one of the things they were saying is they believe that the potential, at least in the short term, for a lot of commerce on places like TikTok with creators is that the consumer looks for inspiration but doesn't trust those people to buy directly, that they need to go somewhere else. And the potential loss in going from the inspiration to commerce is one of the biggest problems. And this was a little bit self-serving because of particular technology they're going after, so I don't want to get into that. But I'm just curious, is there any, what's the unlock there from, because certainly there have been plenty of efforts, going back to Facebook and others that a lot of people have lost a lot of money trying to pull this together. What do you think is fundamentally different now?
I don't know if it's going to be now or if it's going to be in a few years' time. I'm not saying that the model that we have at the moment is the exact one that is going to succeed, and whether or not you go directly to the creator or it takes you instantly within the app to make that purchase right then and there. I just think that right now the number of steps that we have introduces a whole lot of friction to the process that are ultimately going to need to go away. It's a whole idea also of the purchase funnel being collapsed that everyone likes to talk about now.
Sure.
Well, given that we're sitting in the Bamboozer podcasting studio and our friends at Bamboozer are video commerce, it behooves us to ask follow on about that. I don't know if it's separate from social, but just they're experiencing some great growth with luxury clients who are taking the video commerce. Maybe it was going to happen faster than people thought or slower. Any views on the kind of video commerce and interactive QVC stuff and any of that?
Again, I think we're in the early days of exploring that space. We've been talking about TV commerce for a long time at this point, and it's another one of those that inevitably will be figured out. And with all of these, I think that there are great opportunities, but we're trying to figure out what the right model is going to be.
All right. Anything on your mind you want to add before we let you go? I mean, you cover such a you're so impressive because you cover such a vast area of knowledge globally. Anything jump out at you? Like anything surprise you this year that you said, "Wow, that I had no idea that was going to happen anywhere, somewhere in the world." You talked about growth in Europe and what's going. China's kind of slowing down, but it's still powerful. Any last thoughts on that?
Yeah, I think one thing that we talked about in the Future of Digital, which is our big report that comes out now every year, we're working on this year's, but one thing that we're seeing globally is that time spent on media is starting to plateau. So you're not seeing consumers spending more and more time with digital activities every year the way that we have in the past. So in some ways that's raised competition. One company's gain is going to be another's loss when it comes to time spent. And so I think that's actually driven quite a lot of innovation as everyone is looking to get a piece of the consumer's time because there's not a growing pie for everyone to take a piece of.
Interesting. If people want to learn more about you or learn more about the services your shop offers, how do they get in touch?
eMarketer.com. I have an amazing team of about 100 analysts, forecasters, editors that create absolutely incredible research. We've been doing a lot more with data storytelling recently, diving into all of the data, all of the forecasts, the third-party data that we have, the KPIs that we collect, and trying to extract kind of what the biggest stories coming out of the data are, both for what we're seeing today as well as what we anticipate over the next 5 years.
And are you a LinkedIn person? How do people get in touch with you?
I am a heavy LinkedIn user, so yes. Absolutely.
Fantastic. Well, I wanted to also thank you particularly, and Paul, for the work you do in Canada, because our stats are a mess, and we look to eMarketer more than we do official stats. If you know anything about Canada, they're bad. Thanks for joining Steve and I in the Bamboozer podcast studio here at Shoptalk Fall. So good luck. You're heading onto the stage. By the time folks are listening to this, it will all have been the genius that is from the show. So thanks for joining us.
Yeah, thank you so much for having me. This has been fun.
Thanks for tuning in. New episodes of Season 9 will be available each and every Tuesday, so be sure and tell your friends and colleagues in the retail industry all about us. If you liked our episode, please take a moment to give us a 5-star rating on Apple Podcasts.
And I'm Steve Dennis, strategic advisor, keynote speaker, and best-selling author of 2 books, Leaders Leap, Transforming Your Company at the Speed of Disruption, and Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
And I'm Michael LeBlanc, consumer retail growth consultant and advisor, keynote speaker, and media entrepreneur. You can learn more about me on LinkedIn. Safe travels, everyone.